Big welcome to our live audience for the Digital Health Investor Talk show. I'm your host, Steve Wardell. I'm the managing partner of Wardell Advisors, a digital health advisory firm, and the author of The Future of Digital Health. Wardell Advisors is helping digital health companies address issues around growth, fundraising, trade sales, and strategic alternatives, giving you more options in today's challenging environment. You can follow me on x.com/Stephen Wardell. Our show today is on the topic of what's happening at JP Morgan this January, with our special guest, Adam Kaufman, the managing editor of Bearing On Health. Great to see you, Adam.
Pleasure, Steve.
So this show is being recorded and will be included in the podcast series called the Digital Health Investor Talk Show. You can subscribe to our podcast on Apple and Spotify. We always love if you leave us a review. This show is not investment advice, and we are not investment advisors. Here's the format today. The show is 90 minutes long, and Adam and I will spend the first part discussing the news and the macro picture and some other topics. And then in the second part, we'll discuss our special topic of the day, which is what to expect at JP Morgan. And we'll be taking your questions throughout the LinkedIn chat. So feel free to throw your questions into the chat now. So Adam, would you like to introduce yourself to our audience?
Sure, pleasure. I'm sure I know some of you, but it's always fun to join you, Steve. So Adam Kaufman, I've had the good fortune of being an entrepreneur and executive in and around digital health for, I think before it was called that, co-founded and led one of the early chronic condition management companies, ran the healthcare business at Weight Watchers, and have been an advisor, blogger, and consultant for the last 3 years with health systems, with pharma and med tech. And so really looking forward to the conversation and sharing kind of what we think is happening next year, and in particular how it's going for JP Morgan. And as you said, my writing is hosted at Bearing on Health, or often publishing on LinkedIn. So would love for any comments on any of that for those of you from the on.
Great, thank you. And just calling attention, we both have been in this industry for a long time, and it's at various times it's been called Health 2.0 and e-health and health IT and m-health and then digital health. I think Hallie Tecco played a big role in popularizing that term, and it was a very exciting term for a long time. And now two things are happening to that term. I just thought it'd be worth mentioning. The first is that the relevance of the word digital is fading. I like to draw the analogy is that we used to say that these things that we have are our cell phones or our smartphones or our iPhones, and increasingly we just call them our phones, and we don't have line phones. And so likewise, increasingly healthcare, digital health is just healthcare. People expect technology to be baked in. There used to be these big walls between technologists and healthcare people, and enough people are trained in both, and technology's gotten easier that increasingly people are not using the term digital health, they're just calling it healthcare. That's the first thing that's happened. The second thing that's happened is that the term AI in healthcare now has the buzz that the term digital health once had 5 or 10 years ago. And so the momentum has moved to AI in healthcare, and they generally don't call themselves digital health as much. They call themselves AI in healthcare. So I don't know, have you seen this kind of move happening, Adam? What do you think?
Yeah, absolutely. I think the first place I saw it was kind of hybrid care or virtual care. And invariably, depending on who you ask, hybrid care and virtual care are part of digital health, or digital health is part of that. So even just the hierarchy of these names. But I think you're absolutely right. I think, probably the most exciting evolution for our space has been the sort of normalization of technology in healthcare. The older reference, and I thought it was the one you were going to say, was, we used to talk about digital banking and banking, right? And there's no distinction anymore. And so I don't think we're quite there in healthcare, but certainly the seamless experience to go see a doctor, have that note show up so that you could see a virtual care physician or another specialist, or your care plan shows up in your app, and at the same time you're prescribed meds in that way. I think we're navigating a world where technology is just part of it. I'll have to update my own intro though, so I can no longer say I'm an expert in digital health. I'll have to pick up whatever the new thing is, but it'd be nice to just say we're healthcare experts coming at it from the technology angle.
We got to make sure we always achieve buzzword parity. We can't let the buzzwords slip away from us.
Yeah. I'm even looking at your graphic.
For our audience, feel free to throw. We're now moving into talking about macro news, and for our audience, feel free to throw any questions about the macro environment in here. So the big news today is that, as expected, the Fed cut rates 25 basis points, and that's their third rate cut this year. And markets were up about 1%. on the news. Might have been bigger, but they expected this move. And the Fed further forecast for one rate cut next year, which sounds conservative to me. So, and then the markets were up. Apparently also the Fed was divided. So they did cut, but there's a significant minority that's saying don't cut because of fears of inflation, of inviting inflation to return. And the Nasdaq's at about 23.7 thousand, which is near record highs. And so, I think from the perspective of the innovation economy and the young digital health companies that need to raise money and grow, this is good news in general. It means it foretells a better fundraising environment for young companies in general and for digital health companies as well. And it's been a tough environment for the last 3 years. So, and then the NASDAQ being high, that means that if you build a good company, you can sell it at a high multiple on the NASDAQ. And the IPO window is likely open. And those are true. You can sell a company in an IPO at a high multiple on the NASDAQ today. Somehow this seems to apply less well to digital health. Digital companies are having trouble going public, and bellwether digital health companies like Teladoc are trading at low multiples. And so there's a bit of a inverse halo, a negative halo. We're not used to that. We're used to 20 years of there being a beautiful, lovely halo over the head of digital health. And now we're seeing a kind of a negative halo around digital health. And we're hoping to come out of that. We're looking for signs we're going to come out of that and be able to go back to being a normal, appreciated growth sector. So any thoughts on that? Is that what you're seeing as well, Adam? Any other thoughts on that?
Yeah, I think that's right. I'm not as close to kind of the macro impact, so I'll have to rely on your take on the Fed interest rate. But I think from an industry standpoint, we're sort of treading water. I think, the IPOs were good. I think the exits were good. I think there's still interest, but I think we'd all say that it's certainly not tailwinds and maybe a little bit of headwinds from the sector in general. We'll obviously talk about AI, which sometimes, as you said, is in digital health or not. I think there's a real demand for technology in healthcare, but the sort of SaaS-based models, which are sort of the first version of the space, haven't really panned out. And then the tech-enabled services, I actually think are scaling. I think some of the challenge had been they were sort of promised on growth and sort of revenue or gross margin multiples that just may not be easy to achieve with the tech enabled service. And I think that's some of what we've witnessed in the later stage of some of the maturity of these companies.
And Aubrey in the chat says, great to see you again, Adam, and comments that she knew you before digital health. So it's very nice. Thank you, Aubrey.
Yeah.
So then getting into, it looks like we're seeing job openings in digital health slow. That's bad news. A lot of our friends work in this sector and may need jobs now. And I've also heard of a lot of mid-career people losing jobs. That's a big, and then it's tough to figure out where you go if no one's hiring, and then you just lost your job. And people are calling it a barbell economy, which is that a way of thinking of this is that there's an economic cycle, and at the end of the economic cycle is always the downturn, which is the recession. And you never get to skip all the parts of the economic cycle. And it looked like under the Biden economy, we were actually going to skip the recession. Isn't that nice? Wouldn't that be lovely if we could just skip a recession? And that was because Biden was spending on 2 wars, and that amounted to large fiscal stimulus, which was then keeping us out of recession during that time. But now it more feels like the economy is sort of going into recession, is in recession, except for the small portion of it buoyed by AI. So that small portion is buoying 10 stocks in the NASDAQ, which are then lifting the entire NASDAQ because they're such large market cap stocks. And so anyone lucky enough to have sort of jumped onto the AI trend gets to be on one side of the barbell economy, and everybody else is effectively in recession at the other side of the economy. Adam, is that what you're seeing? What do you think?
I think that's right. Again, not paying as much attention to the broader economy. I think it's certainly true in healthcare. We'll talk a little bit more about it, but I think HR1, the big beautiful bill, whatever you want to call it, has yet to sort of flush through, particularly the safety net providers, the Medicaid space, and that's one piece and a big piece of the healthcare economy that I think is really struggling to figure out what to do. I do think there are some of these direct to consumer businesses. If you just play the barbell economy, they're doing very well. We'll talk about GLP-1s and where that's going, and obviously the pharma companies connected to that are still doing well. So I see that in healthcare and digital health, maybe not for the macro reasons, but just some of the chance of policy and technology that there are clearly some big winners and stuff that is going very well. in a number of areas that are struggling and challenged and having to make cuts.
Thanks. Yeah. And so Netta in the comments says AI has seen explosive growth. Healthcare AI appears more grounded. What is the bubble risk in your view? So I think there is a real AI bubble risk. And the way I'll frame that is I'll give you the story of the risk and also the counter story of justified high expectations, you could say. But so first of all, when we speak of bubbles, we're usually talking about financial markets having bubbles. And as opposed to companies' real operations having bubbles. And so in financial markets, you are seeing, the magnificent 10, whatever the term is these days for those stocks that include Nvidia and Amazon and Netflix and Microsoft and Google, et cetera. They have seen a lot of lift to their stock prices. And the fundamental issue of the bubble is that they're built on the promise of AI products being high use and high profitability at a later date, a year from now, 2 years from now. And so if those products don't fulfill that expectation, then those stocks are going to come down and everyone will say this was a bubble. So the markets are betting that these companies will deliver on higher revenue, lower costs, bigger margins, bigger profits in the future. And we just saw an interesting move. And so you could get high usage, but then an AI player tries to raise prices and finds they can't raise prices because people love their free Google search and they didn't want to upgrade to a paid AI service, or it could be whatever the reason is. Google has now made an interesting move, which is that they are now producing excellent AI, which they are giving away. That they have a very generous free tier and they have a very generous low pay tier for Gemini services. And people are pointing out that this is sucking the oxygen out of the room for OpenAI. So OpenAI is very consumer based. They would have loved to have had a popular $20 a month or $40 a month service. But now Google's right there next to them offering something equivalent and it's free. And Google has a giant cash pile. OpenAI has committed a lot of its cash to the future, but Google has a giant uncommitted dry powder cash pile. They can fund this forever for nothing. They also already have an ad network ready to support this. And so so that means that Google's going to make an excellent product and is going to have a bigger market share, but that also could cause some of this bubble to be popped. Now, the flip side as to why we might not be in an AI bubble is that massive capacity has been being built out, and apparently all of that capacity is being used. So there's something very real here. There's something where this is a better product than search. It's a better product than traditional workflow automation, and people are switching to it. And so you are seeing real use and real value, even though there's a little worrying that a lot of pilots in AI fail. But that's my answer. And so all in all, Netta, I'd say that the argument lies on the side that we're probably in a bubble right now. And bubbles are often inevitable. Bubbles are like when the Oklahoma land rush, when everyone's just rushing out, trying to grab the best land that they can, and then reality sets in later. So Adam, any thoughts on this question of whether we're in an AI healthcare bubble or a general AI bubble?
Yeah, two thoughts. I follow an economist Substack. His Substack is Noah Opinion or No Opinion. He's quite good, but he just wrote an article, kind of three possible ways we're in an AI bubble. And I think the most obvious one is not true, which is it's just fool's gold. It's not going to work out. I think that was some of the first internet bubble was just stuff that, didn't actually deliver. He then talked about a bubble, at least in the asset pricing, that looks something like railroads, where they create real value. They're just not able to capture the value faster than their bonds come due. And, this infrastructure is expensive. So potentially, even if they're building real businesses and that is accretive to those companies, it's just the timing may be off, particularly for those, like you said, OpenAI and others who don't have a cash pot to do it. I'm less potential on that. I think what he said was interesting. This could look like an airline kind of style where real value is created. This is really important stuff. It just doesn't accrue to the companies as much as they might think. And so in the end, the bubble is, as you said, not in the underlying technology and its value, but in the assets and the pricing of those assets associated to it. Again, I tend to think, before I give my opinion, let me say what I see in healthcare, unlike other technologies, the health systems I work with, the med tech companies I've worked with, the pharma I've worked with are all investing in AI much faster than I've seen them invest in other kinds of technologies, which is good, which means there's real, but they're investing ahead of, I think, demonstrated outcomes. And so the fear is the investments are meaningful, but when you actually then deploy this and expect a reduction in your call center staff or to adjudicate claims faster or to have better outcomes depending on where you're deploying this, even if it's working, it may not just work to the level of the costs that are there. And so these clients pull back, and that creates a vicious cycle with the companies. I tend to think will look something like that. Now, whether that's a full crash of a bubble or it just rights itself, I think depends, to your point, on, can Google sort of smooth that with some of its other elements, or are we in companies that can't? So I think it's really valuable tech. I think it's important. I think it's going to change healthcare. I read a report that said healthcare is actually one of the main adopters and adopting AI faster than many other industries. And I think it's needed. I'm just not certain we'll see the returns as fast as I think we've been promised or promising ourselves. And so we'll have a period of kind of catching up to the promise of this.
And in healthcare, I think part of the reason you're seeing that adoption is in the area that's called provider administrative workload. And so that includes paperwork and also billing work for providers. And we have seen just very good automation that has really saved the time and the frustration of providers, medical providers, but also the paperwork staff that works with them and the revenue cycle management staff. For example, getting billing notes up to 80% direct to bill when they used to be 40% direct to bill. Just really, and this is because of adding generative AI based on the previous best technology that was available only 3 or 4 years ago. So really big steps there that is causing people in those markets to say it is a no-brainer for us to adopt the Gen AI solution immediately and spread it up across the organization for these tasks. There's even a joke about it, which is that hospitals are arming up with AI to bill more, and payers are arming up with AI to block more. And then first they're going to use up all the world's compute, and then they're going to use up all the world's electricity and water. But the actual collections are not going to change that much across them. And so a GP says anecdotally, not more than 10% of AI initiatives are seeing production value across enterprises. Yeah, there's an MIT study that says 80-90% of Gen AI initiatives fail at enterprises. But there's also that's really interesting. I'd like to see that sort of taken apart more. There's a story coming out of pharma that they're embracing AI for pharma clinical leadership improvements, and those pilots are often failing as well. Pharma has the money to start pilots. They want pilots. They're willing to devote the attention span to pilots with little vendors, and then a lot of them are failing as well. So it's interesting. I'd love to dig more into that. I would just ask our audience to try something out, which is that Google is giving away an excellent AI across its entire product suite for free, a generous free tier. And then if you happen to have the Google Productivity Suite paid Google Workspace, they have an even better set of AI applications across all of their products. You have AI in Google Slides that will take an outline and convert it into a beautiful slide deck for you. And that's something that used to take hours beforehand. Or AI in Excel that will take a matrix of data and convert that into many charts. You don't have to tell it what charts to make. You just say, make a bunch of charts. It'll make a bunch of charts. Some of them will be the ones that you wanted. And then you can have it explain complex topics that you need to do your job in half a page, and it will do a pretty good, surprisingly good job explaining it enough for you to get to do your job at a higher level than you were able to do your job before when you didn't have a place to ask these questions. So just really impressive stuff from Google across the board. That's not a pilot initiative. That is just everyday workflow. Each task that you did in the past now done a little better for you. More recently, with Google Gemini as part of Google Search, I have been asking it questions like, when do I have to leave to take public transit to this event? Or when do I have to leave to go to the airport for my flight? And it's done a really good job of saying things like, you're going by car to the airport and the traffic is high right now, and so you'll probably need to arrive, an hour and a half early, and so you need to leave. You're here. You need to leave at this time. That's the kind of annoying thing that we used to do ourselves, step by step, with guesstimates. And now you just ask your AI that question, and it can work it out. And if you get something wrong, you say, "Oh no, I'm not that location. I'm at a different location, and I'm not going to be taking public transit. I'm going to be taking an Uber." It gets it and it recalculates. It's really impressive. So, any thoughts on that, Adam?
Yeah, I've absolutely found the kind of personal work efficiency, whether you want to call it a virtual analyst or any of those terms, incredibly powerful. I still use ChatGPT as my primary source and have come to like it. I'm not sure that is the same as AI solving healthcare problems. And to some extent, I think the early days of how this impacts the healthcare workforce will have some positives and some negatives. So I think that's a little bit longer as we sort of reframe how we work. But absolutely powerful tools, particularly in the administrative sides, can take a little longer to get into the care delivery side. It'd be interesting if someone's on. I'd love to know people's experience with ambient listening. I mean, that's clearly the kind of killer AI app in healthcare and incredibly important to help doctors make notes. But it's not clear to me if you just think of like impact. Are we materially saving doctors' time in a way that shows up to them seeing more patients, to being more productive? There's no negative in giving doctors back an hour and a half at night, but to some extent that was kind of free labor the system was getting. So, are they not retiring as fast? Like how's that actually manifesting an improvement in the industries? Because that's what we're going to need to see for AI as, enterprise technology to pay for itself. So, experience from people there would be great. The use cases I've seen a lot more like system navigation. Can you replace the call center? And I've seen good solutions of that, but they still take a lot of training, they take a lot of work, and there are still people behind most of those workflows, or a lot of them still. So I don't know if people are letting people go, or just there's just a higher volume of all this. Your AI chatbots asking their AI chatbot. So we'll see where it nets out. I'm ultimately very positive, but I think the point of the bubble is it happening fast enough given the expectations and the money that's going into it, right? That's the question that I think will play out in the next 2 to 5.
Yeah, thanks. And Errol in the chat says the challenge with Gen AI is that it's non-deterministic, which is problematic for enterprise AI. If you send the same information to the AI, it will return different answers. This is especially problematic in regulated sectors such as healthcare. So part of the automation is to experiment carefully with how to apply the technology. We're in the early adoption phases, which is why the traction is slow to be successful so far. It will be augmentation rather than automation for a bit. Errol, thank you. That's really well put. So it reminds me of people have asked very important questions of generative AI and they've gotten totally wrong answers. And then they'll say, that's totally wrong. Now tell me the answer. And Gen AI will just say, I'm sorry about that. Yeah, here's the answer. Thank goodness the human knew the actual answer to that question and spotted it. Yeah, do you have any? That is an issue. So in certain areas, Gen AI gives you a good enough answer, but in certain other areas, like regulated areas or areas where you can't be wrong, good enough is not adequate for those. And I think that one of the roles of the healthcare professional, the doctor, the nurse, etc., is to be responsible. And we don't think that computers or AI are responsible. And so a radiologist will use an AI to do a better job reading a scan, but it can make a mistake. And so the radiologist is ultimately responsible, and they're responsible for the AI they chose. They chose to use a certain AI that maybe cost a certain amount of money. They could have chosen a different with a different price. And so when someone makes a mistake, it goes back to the radiologist and the radiologist's choice of tool to use. And so we're not getting rid of the providers because in a rich healthcare system like the US, we want that person to be responsible. Any thoughts, Adam?
Yeah, two. So one is and this is maybe a little bit broader class of AI, but I think like any industry, healthcare has a throughput challenge. And so I've seen some use cases recently in different ways of using essentially utilization capture, whether that's in video or whether that's through, and then some kind of predictive model, whether it's digital twin or just optimizing where you're predicting OR utilization or consumables, and you're just managing the infrastructure of healthcare better. And we shouldn't minimize, a lot of healthcare is still a fixed asset allocation kind of business. And so getting better turns on your fixed or better utilization of fixed assets is a very big deal. And I think it has impact there, but also remind that, okay, so, let's say you could get another turn in your OR if you optimize it. Well, you still have to have the people organized, and that means they have to do it. So like this, there will no doubt be optimization, but I think some of the AI promises, this is orders of magnitude better and not incremental improvement. So I think we have to wrestle with that. The other case I'm really interested in, and I think this is an incredible step forward. And as a full disclosure, I've done some work with one of the companies in the space. But for example, the CT angiogram's ability to essentially do a full plaque analysis to tell you where you're developing plaque in your arteries, and to even give you a score. I heard a physician say, I think very succinctly, we've moved from kind of a diagnostic, meaning you've got mild, moderate, or severe plaque, to we moved from a test to a diagnostic. Right now, you have a score, and you can do something about it. And there's a small part of healthcare where having that will make us more efficient and effective, right? So you can better utilize your cath lab. But that's one of the smaller use cases. I think if we think about healthcare overall, what that will lead to is a lot more people getting tests they wouldn't have, a lot more utilization. We'll prevent a number of, heart attacks and myocardial infarctions. And so individually, that's great. But depending on what you're optimizing for in healthcare and the pace of it, you'll actually see greater utilization, more cost in the early days as we play this out. And so some of this is like, how are we actually measuring that things are effective? And so I think these are really, really important advancements. I haven't gotten that score yet, but I have a high cholesterol, so I will one day. But at the same time, if you're just sort of, are we bringing costs down? Are we reducing utilization? Some of this technology will actually increase utilization and costs in the short run, hopefully at the point in the future where we've reduced long-term implications and sort of unexpected death from heart attacks. But that's a lot of this trade-off as well on the clinical side.
Interesting. Thank you. So AI triggering excess utilization on the front end, maybe because we have more data, because we are looking at things more, and that does not necessarily lead to greater public health. Julie
Correct.
adds,
Depending on what it's crowding out, right? So I've become very interested in the broader set of what people are calling longevity and proactive care, but there's a huge debate about, is that crowding out other utilization? Should we have it? Should we not? And so I think we just need to be honest with ourselves that, not all, there's trade-offs in a lot of these things.
So I like to use the example of in the early days, I was privy to some discussions at Fitbit about they were going to add heart rate variability tracking through light in their wristband. And they expected to have a lot of data about their users, and they wanted to tell their users if they had problems, but they couldn't tell them what they saw or thought they saw. They could only say irregularity detected, see a physician. That was all they could say. They couldn't say, we can see that you have AFib. They couldn't say that because it's a consumer device and they don't want to be a clinical device. And so this then caused millions of middle-aged men and other people to get notifications saying irregularity detected, see a physician. And it caused, they would not have otherwise gone to their primary care doctor, who then put them on a path to get a sonogram and possibly a stress test and talk to a cardiologist, et cetera. And that may have caught some real problems early, but it also caused massive utilization of the system, which then has a potential to crowd other things out as well. So Julie comments, I was at an event last week and MDs, I think she means doctors there, said, note-taking AI has a long way to go. Thank you, Julie. And Errol comments, ambient AI, that's also note-taking AI, is a good example. I went to a doctor yesterday, and the AI notes that my visit generated had errors that I corrected in a message to my PCP. It said I had a condition, but we were actually discussing it generally with diagnosis for him. So that's interesting. Your notes capturing that you have a condition when you don't have a condition. And then Netta comments, or is generative AI increasing healthcare demand due to people using it for self-diagnosis? Is that good or bad? Well, I think a lot of people I know who I already knew were high agency people who are take charge kind of people. They are taking their health questions to generative AI and they're claiming that it's great. And now, is that a significant proportion of the population? And is it turning out to be great down the road after they work with the traditional healthcare system? I don't know yet. Adam, any thoughts on Julie, Errol, and Netta?
First, appreciate the sort of lived experience or anecdotes of people with the technology. In terms of is it kind of driving improvements and driving increased demand? I think both things can be true. Again, if you look at the sort of the proactive healthcare space, the good news is we've now got a lot more tests that can help detect risk earlier. So your Fitbit's a good example. The modern equivalent might be a full body MRI, right? And it does take AI to actually read that image and then to give something meaningful back. And that is no doubt catching, tumors earlier, and people have been saved from it. On the other hand, there's a lot of incidentalomas that are causing confusion. I think some of this is us just figuring out how to deal with the stuff we're not as clear on and how to communicate. And so we got a little bit of a transition, and some of it is driving. I'm sure we'll get to it. I'd say the one challenge I had in what is AI driving, let me step back. I think there's no doubt that consumer control, interest, and demand in healthcare is growing. I have trouble separating what I really think is probably more impactful, which is the GLP-1 revolution and sort of the direct to consumer virtual care that started and grew around that from AI. I think that's probably a bigger driver of people feeling like they can control their own healthcare. I think some of this is there's been this long trend of like cost, consumer share of cost has been going up. And so that has been sitting in the background. But this sort of unlock of like, here's a drug I want. I can now go get it. It's cheaper to get through the consumer. And I think is probably more to do with now consumers realizing they can go direct to healthcare than the AI. But I think they're complemented and to some extent are self-reinforcing.
Really interesting. Thanks. Well, so now we'll just jump to any business and trade journal news of the week. And for our audience, feel free to throw in any stories of the last week, trade journal, business news stories for us to comment on. And so I'll comment that I continue to see not a lot of fundraisers. And when I do see fundraisers, sometimes they're actually funded by non-digital health VCs. And that's a surprise. It means probably that the CEO went and looked for funding from digital health VCs and didn't get it, and then managed to put together a syndicate of non-digital health VCs or non-classic mainstream funds. I continue to see that. I'll just comment on a couple. There's a Boulder-based Lynn Health, is a digital behavioral health platform for chronic pain patients, and they secured 11 in an oversubscribed round led by Proofpoint Capital with new investors, Osage Venture Partners, and New Health Ventures. Proofpoint and Osage, those I would characterize them as not mainstream digital health venture funds. So good for Lynn Health for pulling this off. Digital behavioral health platform for chronic pain patients. That sounds interesting. That's not one of the sort of most common areas for chronic care management to go into. So I'm glad to see someone going into that area. And then I'll move on to tech-enabled clinical research platform Paradigm Health, raised $78 million in an oversubscribed Series B round and announced its acquisition of oncology-focused digital health company Flatiron Health's clinical research business. The B round was led by Arch Venture Partners. They're a biotech and medtech fund, and participation from DFJ Growth and General Catalyst. Google Ventures F Prime. So General Catalyst, Google Ventures, and F Prime are mainstream digital health venture funds, Lux Capital. And they offer an intelligent research platform that connects patients, providers, and trial sponsors using AI to automate patient matching and site feasibility. So really interesting. This is AI applied to speeding up clinical trials. And that's one of the hottest areas right now. Pharma tech is very hot right now. AI for speeding up clinical trials is very hot right now. And so this is a fundraise that falls right in the sweet spot. And it also involves an acquisition. That's nice to see. I think acquisitions are under-hitting expectations right now. There aren't as many as people expected there would be. It's nice to see that this is a fundraise tied to an acquisition of Flatiron Health's old assets, their clinical research business. So Adam, any thoughts on these rounds or any other fundraisers that you've been following?
No, nothing to add to what you said, just that I think it's right that it's still slow for fundraising. The venture capitalists that I talk to and the businesses, what I hear on the venture capital side, interestingly, is funds that are looking for things to invest in and not finding it, which when I couple that with the side I hear from the CEOs who are looking for money, leads me to believe there's still a gap in expectations. I hear early stage companies sort of saying, hey, I'm about to go for the Series A, but kind of the milestone keeps getting pushed out a little bit. And so I got to do another, I got to do another round in between. And I hear the venture capitalists say, hey, the technology we're looking for isn't quite there. Again, I did a lot of work recently in the space of longevity, talked to a lot of like even later stage funds who all had a thesis and none of them had made an investment yet. So, and that's a hot space. So I'm not as plugged into the day to day, but my sense is that, we're seeing still a gap between what companies are achieving and their expectations and where the funders are in terms of milestones they need to see for particular rounds.
Yeah, longevity is a very hot space. And I think last week, Function Health announced the raise of over $200 million and an evaluation of over $2 billion. So pretty remarkable. And they have a partnership with Equinox. I really like the look of that partnership with Equinox. So, and that's also consumer-led, driven spending. So to get back to Netta's point, you've got consumers willing to spend money on things like wellness and longevity care. So any other business or trade journal news you wanted to bring to our audience? And for our audience, any other stories you want us to talk about?
Yeah, not sure exactly which category it fits in, Steve, but I'd love to just spend a minute. I don't, let me say it positively. I think we should all track what's happening with the vaccine policy. I say that just in general for public health, I think it's a big deal, but I think if you think about the business side, this has been a pretty well understood category. There hasn't been much doubt about the value companies have built and been able to invest in stability. And I think if we see vaccines become topsy turvy in terms of regulatory risk, it's just not clear to me what that then goes to next. And obviously, risk and change is good for some people, but most of the companies in the space want stability and want to know what's happening. So I think where that shakes out, and I guess the committee delayed its vote a little, and so we may get back to normal. But I think that's a real area to watch. The other thing I think, just to put on people's radar, we talked a little bit about GLP-1 pricing, but I want or GLP-1s, but I want to bring up this is really the first category in pharma where we've seen this kind of price competition and we've seen price dramatically reduce, right? The history is pharma companies have been more accepting of sharing the total market than changing price and trying to win. And I think this is a combination of huge consumer demand and huge segments of the potentially addressable market with the medications that wouldn't be covered unless price dropped. But I think I saw, did Lilly say that it's like $150 if you're Medicare cash pay? Like this is order, this is 10 times drop in like 18, 24 months. And so I just think both what it means for GLP-1s, but also what does it augur for kind of the history, the future of sort of competition in big categories that have some consumer demand that payers can adjust. So I wouldn't leave that straight. And then the last one, we'd be remiss if we didn't say that the telehealth coverage, while it got increased and added, like I think is scheduled to go away again in January. And there's so much of our space that's dependent on the telehealth coverage. As part of that, I think you talked about last time, United Health changing its remote patient monitoring cover. Like we shouldn't discount the sort of broader themes that are going to hit digital health in terms of how they show up, whether it's regulatory risk, pharmaceutical kind of competition, or even just coverage for digital.
Yeah, interesting. Thank you. And I've been following a story about how Trump early in the year announced that he wanted U.S. drug prices to come down. He wanted most favored nation pricing with other countries. And so I thought this was going to be a regulation, but it turns out that he's doing deals with CEOs of pharma companies, and they're coming out of these deals announcing that they're cutting the price in the U.S. And that includes GLP-1 drugs. And so starting, I think, in January or February, consumers can go to a website called, it's got to be like trumprx.gov, something like that. And they'll be referred to lower cost drugs, and that'll include GLP-1s. And so I know some people who might not qualify as completely obese or diabetic, who are considering starting GLP-1s in January, February, because the drug will be more accessible and lower price, and maybe they'll finally take off the weight that they've been wanting to take off. Really interesting. Thank you. Yeah. So now we get to a favorite part of the show, which is there a technology or a use of Gen AI that has improved your life? And so I'm just going to circle back to what I mentioned before, which is I decided I used to use ChatGPT for some things. I used to use Claude for some things. I used to use Grok for some things. I used to use Gemini for some things. And I decided to just use Gemini for everything because I have the paid Google Workspace. And therefore, I can have Gemini, a version of Gemini in Google Search, in Gmail, in Google Sheets, in Google Slides, in Google Drive, in everything I use in Google. And I could just gain the benefit of that and train myself on that and get the workflow automation capabilities of that. And so and that includes one of my favorite is the speech only mode of Gemini, and ChatGPT has this as well, and Grok has this as well. But you're speaking in easy, fast conversation back and forth instead of typing and then reading text. So I've switched over to Google Gemini in order to learn the use of the apps across the whole workspace. Adam, any thoughts about a technology that's improved your life that our audience could benefit from?
Yeah, I'm a little late to the game, so I think that the audience will know these. But I, after nearly half a century of life, decided that I want to learn guitar, and so I picked up Simply Guitar, which is a consumer app. My kids love Duolingo, and they have the same sort of like gamification, fun element of learning. And I am embarrassed to admit that I had missed that boat completely. Turns out I'm not a good guitar player, and so I'm not sure if I'm going to continue it, but it made it easy to pick it up and try and learn. And so I think the combination of chunking, gamification, the adult learning theory, everything that went into making those apps just simple and easy to use and fun. And in case of Simply Guitar, like every week there's a new song from a new hot artist that's on there. Like they've done to education what I'm not sure we'll ever get to in healthcare, but just took stuff that people had struggled to do forever and made it easy, made it pass out over time. And I can tell you, my son will go to sleepaway camp, can't bring his phone, and the one thing he asks is to not let his Duolingo streak end. So there's something about the technology that has been put into those consumer facing learning apps that is just incredible. And it didn't change my life in the sense that now I started actually reminding me how hard it is to play guitar, but it wasn't for the app. So I put a plug in for those kinds of learning systems.
Yeah, really interesting. I'll also second you with Duolingo for languages. So I'm in a group of people who vacation with kids who vacation together, and our next destination is Italy. So multiple adults, multiple kids are in competition with each other across Duolingo, learning some Italian. So that's fun and incredible. You don't think of yourself as a middle-aged adult learning a new language, but it can be fun and interesting, especially in anticipation of going and having a vacation there and being able to speak the basics. And then when you get
Real
there,
quick,
you use
before
the
we leave
Google
that, Steve.
Translate.
Yeah, I was going to say, I'm curious if anyone's got the in-ear translate, for those of us who read Hitchhiker's Guide to the Galaxy, right? It was the Babelfish, like the modern Babelfish. I think you were going the same place, but I haven't tried that technology yet.
So with Google Translate, which is an app for your iPhone or whatever, you can go to a menu, and let's say that the menu is a German restaurant and it has that old medieval text that German is known for, and then you hold your phone over it, and the menu, let's say, is black and it has white text or something, and the font is this weird font. You hold your camera over it, and it keeps the colors and backgrounds and fonts, but it changes the words to English words. It's just incredible in those old German fonts. It's just incredible what it does. And so you're wondering, is this real? Is this science fiction? And then I don't know anyone who has done simultaneous translation. Perhaps using an earpiece might be helpful with that. Maybe our audience will comment on whether they've used it and tried it. But
and if
really
I could ask the audience one more thing, I've been waiting and I don't think it's quite the killer app to try the glasses. So whether it's the Meta glasses or others that have the kind of camera vision built in. So I think, pretty soon we'll all be kind of bionic, at least if not implanted, like in the accessories we're wearing, right?
Yep. Yeah, I could certainly use the glasses for name recall, although that also sounds kind of Orwellian for somehow.
No, that's what I wanted for too. So,
we're getting close to half the show, but I thought I'd bring up, we're about to talk about the JP Morgan Healthcare Conference, and people are preparing for that, and that's the second week of January in San Francisco. But are there any other conferences that you like and are planning to go to and that are coming up after that people should be thinking about? There's Vibe, which is for payers and providers, which is a kind of a innovation conference and an investor conference. I think it's not a trade show, though, and that's in February 22nd and 25th in Los Angeles. And there's HIMSS, which is a big trade show that's primarily for hospital CIOs, but also for CFOs and other professionals in that area. And that's March 9th to 12th in Las Vegas. So those are coming up. And I recommend for audience for different reasons to go to each of those.
Yeah, those are the three on my radar for call it Q1.
Great. And then personal notices. So this is a chance to tell our audience about what you're up to next. And so I'll just mention that our next show is going to be Wednesday, December 17th, next week with Lana Karen, who is a medtech VC at Solus Bioventures. And her topic is going to be what next-gen medtech brings to longevity. And we're going to talk about bionics used to prolong human life and extend human capability. So really interesting show next week. Adam, any conferences you'll be at where you welcome meeting people from our audience, or any events you're putting on, or your regular newsletter you want to tell our audience about?
Yeah, just real briefly. So I will be around JP Morgan. So would love to see you. Vive is in Los Angeles where I live. So I'm always trying to make LA more of a place where this is happening. And I am a member of him. So likely we'll be there, but haven't committed to that yet. And then just one pitch. Yeah, would love for anyone to read our stuff from Bearing on Health. It's all published on LinkedIn. So you can subscribe to the newsletter or not. And just one short pitch. We just finished a survey of 334 consumers around health optimization, a little bit around what motivates them, what would they expect in these services, how would they find out about them, And so we'll be publishing that sort of health optimization, prevention, longevity kind of consumer survey in January, and probably a couple webinars just kind of releasing the results. So look for that if that's a space anyone is interested in.
Great, thank you. So now we'll get into attending JP Morgan. So I guess why don't we kick off by JP Morgan is an unusual conference because the vast majority of people who go to it do not have tickets from JP Morgan and do not actually walk into the Westin St. Francis Hotel in Union Square where the conference takes place. And the conference is these days primarily about big public biotech or crossover investments in private biotech that's going to go public. And that's not what our audience is. And yet our audience still goes there. And so, so why is JP Morgan unusual and who goes to JP Morgan? So I'll mention that the JP Morgan Healthcare Conference was originally the Hambrecht and Quist Conference. They were a growth investment bank focused on biotech in the 80s. And then they were bought by JP Morgan. And it's an investor conference. And the nature of investor conferences is it's all about companies presenting their investment deck to investors. And they're usually in the downtown of a financial city. So those cities are Boston, New York, to a lesser extent, Philadelphia, maybe Miami, Chicago to a certain extent, definitely San Francisco, and maybe LA and San Diego as well. In theory, parts of Texas might be, Dallas and Austin might be financial cities, but investors ought to be able to leave their office and travel for less than half an hour, go to your conference, and then return for the rest of their business day after they've seen a few presentations they want to see. That's an investor conference, classically. And public investors is a big part of this. Companies that are about to go public, companies that are public. And so that's what JP Morgan is. But then over the decades since 1980, all of healthcare decided they wanted to go to this conference because it was so good for meetings. And it was so good for meetings for a very specific reason, which is that large companies would send their CEO, their CFO, their head of investor relations, and maybe their head of corp dev as well. So if a large company is sending those people, then small companies will rush to go to this event to try to get meetings, partnership meetings, sales channel partnership, product development partnership meetings with the big companies and their key executives. So these externally facing transactional executives, CEO, CFO, head of investor relations, head of corp dev, go to this event. And then young companies just drop whatever they're doing and rush to this event on the chance of getting meetings with the big companies who have the big cash. And those big companies are there not really to meet with small companies. They're there to present to investors. They're there to present their investor deck to investors. But while they're there, they might as well meet with small companies they're curious about. They'd like to potentially meet, that sort of thing. So that's the genesis. This happens at all investor conferences, but the JP Morgan Healthcare one in San Francisco, where healthcare primarily means biotech, was just the biggest and the best for a long time. And every other investment bank chose to go there. And all the big companies in healthcare chose to go there, and all the small companies in healthcare chose to go there, and eventually all the VCs chose to go there as well. So now small companies could meet with VC investors and also with deal executives at large companies typically large companies have cash and not innovation. And then typically small companies have innovation and not cash. And so this is like chocolate and peanut butter, two great tastes that taste great together. So the small companies are beating it to be there because the large companies have cash, but they don't have innovation. And so that's sort of what's going on at JP Morgan. Why? And then the really odd thing is that only a small percent of people get tickets from JP Morgan to go into the rooms where the investor conferences are, where a public biotech gives a conference gives a presentation about its investor deck. Everybody else is just hanging out in hotel lobbies in the area, and there's no programming. And because there's no programming, so that means that you do 6 meetings a day, and you're in a hotel lobby, and you're walking to other hotel lobbies to meet people, and you scheduled the meetings for this. That you're not attending programming because you weren't invited by JP Morgan to go inside the Westin St. Francis Hotel. So you're hanging out in hotel lobbies, you're scheduling your own meetings, and then people are putting on parties at night because no one went to any programming or parties during the day. But starting at 5 or 6 or 7 p.m., everybody's putting on parties. These are usually put on by law firms, by accounting firms, by the big investment banks, by the service firms. They spend the money to go put on a big cocktail party in a nice venue in the Union Square area, and then they invite their friends to go to the cocktail parties. And you can usually get tickets to these if you know somebody, or just ask them for a ticket. And usually they say it's just people who aren't invited, but you can ask them for a ticket. You'll probably get a ticket. So that's what's so unusual about JP Morgan. And from a young company perspective in digital health, a young software company, you can go there and let's say that you sell into pharma. Well, you could expect that big pharma has their CEO, CFO, head of IR, head of biz dev, maybe even head of sales, maybe even a division head or two are attending. But also VCs are attending. San Francisco VCs, California VCs, nationally, many VCs are going there. They're renting space as well. And so what you do is you make a list of the meetings that would speed up your agenda for the next 12 months. And that's going to be big companies to partner with and VCs to raise money from. And then you write all of them right now and say, let's meet. And a significant proportion of the people you write are going to JP Morgan and they want to do meetings, and they'll go, yeah, let's meet. And you try to work out, try to get 6 meetings a day, whatever the number is. So that's what JP Morgan is and why it's unusual. Adam, any thoughts on, and then there's crazy stories of weird abuses of how crowded it gets and people being charged ridiculous amounts of money or setting up shop inside of a retail store that is still acting as a retail store while they're doing deals on the table in the corner or other things because it was so crowded. It's actually a little less crowded these days, but it was crazy crowded before the pandemic. So Adam, any thoughts on why JP Morgan is unusual? What's good about it? Who goes
Yeah.
there? Crazy stories from the past, that sort of thing.
Oh, I've got so a couple things that so just one thing in terms of structure. So if you ever get an email from me, I won't ask will you be at JP Morgan. I'll say will you be around JP Morgan? Because no one that I've ever met with and I can't tell if this is my 10th or 11th year. I can't remember if I went first in 2014 or 2015. And I've been gone every year since, but I've never been to the actual conference, to your point. What I will say, in addition to everything you added, Steve, is I have seen over the last, call it 4 to 5 years, started right before the pandemic and post, is there are other organizations that are putting on, for lack of a better word, satellite conferences, like half day of programming. A lot of those are sort of like the incubator feel or somebody. So there are events that will be around JP Morgan that do have content as well. So that is something depending on who you are. And almost every incubator, if you're part of Matt or you're part of Scale Health, you're part of any of these, they've got a list of all the events. If you're in health tech nerds, any of you, they've got a list of all the events. So it's very easy to find all the things that are going on. And I'd encourage you all to make a list. I'll add one last kind of crazy thing about it, and then we can talk about why to go. The crazy thing I'd say is, so it's in Union Square, but not everyone's there. And so be prepared to walk up and down San Francisco. Like you're at the base of the hill. And so half of the meetings are up the hill and then you come back down. And if you're scheduling meetings, unlike other conferences where you're in the conference hall and you got to walk from one booth to another, maybe it's 2 or 3 minutes, it can be 15, 20 minutes between places. So the logistics are crazy. And I'd say let's say 8 times I've been there, it has been raining 7 of the 8 times. And one time, like so bad, the water's coming up. So San Francisco in January is a fun but tricky place to be. I think part of why it's been so successful is it's sort of the formal or informal kickoff to the year. Right? It's early enough in January that people have, okay, this is where things start. And so I remember when I was fundraising, we would be like, okay, you're not actually going to raise, and then you're going to kick off your fundraising at JP Morgan, right? Or like, this is when you're going to start closing. Like the year ended and JP Morgan's kind of the official start of the new year. So I think that's an important thing to think about. I think in terms of why to go, you hit it on the head. You can have 6 scheduled meetings plus 5 or 6 unscheduled, like run into somebody who's meaningful a day. And, most of those are not at the stage where you get on a plane to see them, but you can move conversations forward. I occasionally meet somebody new. I would say be prepared to never close anything at JP Morgan. Like a lot of conferences, I'd say it's sort of mid-funnel activity, whether that's sales or fundraising, but they're really important. To your point, we had a big relationship with one of the major med tech companies. It had been being negotiated. It was sort of sitting around, and I was able to get 2 minutes with the CEO of the med tech company in between his presentations to the actual JP Morgan panel to just put a name and a face so that when it came to him, he approved it later. So there's a lot of that sort of, if you're mid funnel with any of those transactions, whether it's sales or fundraising, it's there. And then the last category of people I would add is I have seen a lot of the health systems and health plans show up. So in addition to the innovators, to the big companies and to the banks, you will have the health systems and health plans. Typically, it's their innovation groups or their folks who are either investing in or partnering, but you can also get meetings with the big players in kind of the health care delivery as well.
Yeah, really interesting. That's great. Just reacting to that, yes. So there are side conferences that are not run by JP Morgan. And the most famous of these is there's often medtech conferences. And for those, medtech companies will buy a speaking slot for, it's like buying a ticket, except they buy a more expensive ticket and it gives them a speaking slot. And then they go and turn around to all of their audience, which could be medtech investors and prospective partners and prospective customers. And they say, we're speaking at JP Morgan. They're actually speaking at a little medtech conference that's not run by JP Morgan. They say, we're speaking at JP Morgan, come to our event. And probably not many actually come to their event, but now they're known as they're speaking at JP Morgan. And then some of the people will reach out and say, well, send me your deck, or let's do a call because you were speaking at JP Morgan. So that's pretty common. And then in digital health, there's often a lot of these side events as well. And so this year, there's a new one that's called Health Tech Week and Summit. And this will have Matthew Holt, who in the past ran his own event during JP Morgan on the Wednesday of JP Morgan. It'll also have Daniel Kraft speaking and others. And so the Health Tech Week and Summit, send me an email if you're in the audience and you want, I have a discount code to this conference. So the Health Tech Weekend Summit is January 14th, 15th, 16th. So it's at the end of the week of JP Morgan. And the main stuff in JP Morgan is the beginning of the week. So they're filling up the empty days at the end of that week. And they're seeking to do a health tech and digital health conference. It looks like it has a heavy investor presence, which is nice, a heavy innovation presence, which is nice. But that's a kind of if you feel like the main course at the JP Morgan conference is not serving your needs, you can sign up and pay extra for a ticket to one of the side conferences. And this is a new one, the Health Tech Week and Summit, January 14th to 16th. Send me an email. I'll send you a discount code. It looks good to me. And then Startup Health, I think, used to have a great festival during JP Morgan, and they are an incubator from New York. And I don't think they're doing it this year. At least I didn't see them doing it this year.
They're having something.
But yeah, so
they're having something, Steve. Yeah.
And those incubators, usually what they're for, what they try to do is they usually have good relations with good long-term relationships with investors. So they'll try to get dozens of investors to show up to events. And then at those events, they will showcase their portfolio companies to those investors to make sure their proposals get seen by a bunch of investors at the event. Otherwise, it's up to the young company to figure out how to meet all these investors with no support. And so that's often what these incubators do during that time. And they also look at prospective new, very small companies to take them on board their incubator. So Aubrey replies, they are. So that's good. So Startup Health is doing something at JP Morgan this year. And so, and then I'll mention some crazy JP Morgan stories. So yeah, one is that to go from meeting to meeting, you're going outside in San Francisco in January. It's usually windy, it's usually rainy. And so you will often bring an umbrella and then you'll wreck your umbrellas. And you're walking around JP Morgan with a wrecked umbrella in your hand and you're wet. So that's one of the things that happens at this conference. Another one is you're walking around and you'd run into people that you met 5 years ago, 10 years ago, 15 years ago in healthcare. You meet those people and they're open to meetings, and usually they're both in a rush, but they're also open to meetings. And so you can have those sort of serendipitous meetings. And another one is that it got so crowded, so insanely crowded, that hotels started opening up regular rooms as meeting rooms, regular overnight rooms as meeting rooms. There weren't enough meeting rooms. And so for years you would go and you would have meetings and you'd sit in a hotel bedroom with a bed right there and you'd wait. And then someone would knock on the door. Someone would come in and introduce themselves. You sit at this tiny table, because these rooms have tiny tables. And right next to you is a giant king-size bed. And you meet with them for an hour and they leave. I always found that really awkward, to be meeting with someone in a closed hotel bedroom with a big giant bed right there next to us, taking up 4/5 of the room. And then what they started doing, which is hotels, people complained about this. And so hotels would disassemble the bed so that it was lying in pieces on the floor, maybe move a couple pieces of it out of the room and leave the rest there so that the room looked more like a meeting room instead of a bedroom. And I had one case where an investment bank gave me a very nice suite, which was a meeting room with the bedroom off to the side. And then they didn't tell me that their own meetings were booked for the meeting room for 7 a.m. And so I was tired and I didn't have a meeting until after 7 a.m. And so I woke up, in my bedclothes with the sounds of a meeting in the common room. And that's where my luggage was. So I had to stay there. I didn't want to walk out in underwear into the common room to grab my luggage, to take it back into my room so I can get dressed and then come out. So, and then another time, a venture fund was late to getting space at JP Morgan, but it was all booked up. And so they sent an intern who just walked in concentric circles around the West St. Francis Hotel until they found a high-end redwood furniture store, a couple blocks from the Westin St. Francis. And so then this furniture store had a redwood dining room table for sale for $9,000 in the center of the furniture showroom. And so they said, can we just have our meetings at your dining room table in your furniture showcase room? And they said, sure. And so they told people, come to this address. People walked uphill, go to the address, and it's a furniture store showcase room. And then their meeting partners are sitting at the dining room table for sale for $9,000. And then you have meetings with your papers out on this for sale table. And then when I was there was a very elegant looking woman walking around, staring at all the objects in the room right next to us, walking right up to us, staring at objects. And I think she was there looking for pieces of redwood furniture, Auger d'Art for her home or whatever. But it was just this is sort of the craziness of JP Morgan. There's no good space. And so you make do with this space or with meeting in a basement cafe of a low rent hotel 3 blocks from JP Morgan or whatever, just because that's the space available. Nobody thinks that you're bad because that's the space you got or whatever. And most people who are used to first class hotels, they're staying in somewhat dive hotels because there's just nothing to rent within 6 or 7 blocks of the place, and you don't want to be walking. And then more recent years, you've actually have had a bit of a zombie disaster zone in Union Square. And sometimes they clean up Union Square, sometimes they don't. But some years I've been there, most of the stores around Union Square are elegant women's fashion stores and jewelry stores. And there were some years when they were all boarded up. They were all going out of business and boarded up with plywood. And there were large numbers of sort of dodgy looking people hanging around with nothing to do looking at you. And then other times there have been a large number of police and private security with handguns on their hips wandering around Union Square during JP Morgan and presumably removed some of the homeless before all the business executives showed up. But San Francisco's had some tough years, and Union Square does not escape those. There's often a large number of kind of Skid Row and homeless, and people often feel threatened by it, and they are walking through big messes to get from one meeting to another. Adam, any other just thoughts about the general experience and reacting to some of those crazy stories or your own crazy stories? Yeah, that's great. And so so I have a friend who decided to take lemons and turn them into lemonade. So the lemons are that a dive hotel that is not very nice, that is a 6-block walk through a zombie disaster zone to Union Square, might cost $800 a night with no meeting space. And so what you can do is that what this guy did was, it turns out that what people don't rent during JP Morgan is they don't rent a whole Airbnb house with 6 or 7 bedrooms. In general, that's not what business people rent during JP Morgan. And so this guy would rent a whole house with 6 bedrooms, 7 bedrooms, 8 bedrooms. He would rent it 9 or more months in advance. So shortly after the last JP Morgan. And then he would spend the forthcoming year, when he ran into a friend, he would say, why don't you stay at my Airbnb and I'll charge you for it and it'll be cheaper. And we're going to have Jane's going to be there and Bill's going to be there and Bob's going to be there. And why don't you join us? And so it was sort of like getting the band back together, or it was like maybe a weekend at Bernie's, or I don't know, or like sort of getting back to college fraternal life or something like that, you could say. And so that turned out to make friends, and you're meeting some people you already know, some new people. Everybody's very polite. Everybody's very successful in business. Everyone's very polite. Nobody's being a jerk. So that's another thing, that these extremes of JP Morgan that force on you. In most conferences, your business buys you a normal hotel room, but at JP Morgan, you might find your better option is to go stay in with a group of 8 people living together who've never as 8. Some know each other, but most people are showing up and don't know anybody for it. So that happens as well. Yeah. And Adam, building on what you said, so people going to JP Morgan, if you're spending the money to go to JP Morgan, you should be making a giant list of people to meet. In general, product people don't go to JP Morgan, but deal people do go to JP Morgan. So you're looking to meet at large companies, you're looking to meet the CEO, CFO, head of investor relations, or head of corp dev. That would probably be the head of corp dev would be most likely. There might be 2 or 3 people from the corp dev office who are there, and then they might even have some general managers if they have like a division of the business that is a $7 billion revenue division of the business, the general manager. That's like having the CEO of a $7 billion company. And so the general manager might be there as well. And so and head of sales might be there from the big company as well. So you're reaching out to try to meet with these people. And then if you're a young software company, you're also trying to raise money. And so many VCs are there. So you're reaching out to VCs as well. And then some nuances on this is that I have friends who they know in advance they're going to go to San Francisco several times a year. They're going to go to New York City several times a year. They're going to go to Chicago, Boston once a year. And so that means that they know that they'll have great meetings with whoever is based in San Francisco anyway. So what they do for JP Morgan is they reach out to people they say are geographically undesirable people. So this is a hot venture fund in Seattle, or a mainstream med tech fund in Austin, or a longevity venture fund in Miami. And their business wouldn't normally take them to those cities. And so they go way out of their way for JP Morgan to try to identify all of the geographically undesirable people and ask to meet them, because that will save them a trip in April to Seattle. And they're not at a phase of their life where they want to be on the road, getting status with airlines and hotels. And so that meeting can do that. Another meeting is that in the old days, JP Morgan was for first meetings or for catch-up meetings with existing deals. But increasingly, first meetings are now done with a Zoom call. And that's up to the young company raising money to come up with news announcements that entice and attract the interest of their prospect who's already done their first hour-long call with them. And so now JP Morgan is intended to be like first in-person meeting. So you met with 30 VCs, and of them, 7 expressed real interest, and you haven't met them in person. And so now your job is to come up with a news story that's a hook, and then tell them, we'll be at JP Morgan, and here's a press release that we send out. That's another piece, is that figure out your strategic communications plan and what stories you have coming up for around the time of JP Morgan. And then often people will launch them as press releases on the Monday morning before 8 a.m. San Francisco time. So 7 a.m., 6 a.m. San Francisco time. And then they have something to talk about. They can reference their press release, and they can seek additional meetings to talk about what the piece of news. And investors care about 3 kinds of news. They care about sales and biz dev announcements, they care about product development announcements, and they care about syndicate announcements. So a syndicate announcement is like a pharma corporate venture fund is interested if we find a lead investor who's not a corporate venture fund. That would be a syndicate announcement. And so you figure out what your story is for JP Morgan, you announce it early Monday morning, and then you have your agenda set for all the meetings that you booked, but you also have a hook to get other meetings while you're at JP Morgan. But those meetings increasingly with VCs are now first in-person meeting after you've already had 1 or more hour-long calls with them, and they're still interested in you, but they want to meet you in person. And so you use JP Morgan. Otherwise, you have to take a special trip to San Francisco for a single meeting, or a special trip to New York for a single meeting. And so why not get that done at JP Morgan? And when people are in meeting mode, they want to meet, they'll be more open to do meetings. You can use the conference as a forcing factor to get the meeting in person, that sort of thing. So that you should have the list of, it's number 1 is for young company, number 1 is venture fund, partners at venture funds. Number 2 is big companies who could be either your purchasers or your sales channel partner or your product development partner. And then number 3 would be other companies in your sector. So usually you want to partner with the big guys, but there might be like, is Teladoc a big incumbent or are they a super vendor? Like sometimes you want to meet with the super vendors who are not necessarily, they're not as big as United Healthcare, but they're bigger than a little startup. And so, but usually you want to meet with the big companies who have a lot of cash and no innovation rather than meet with the super vendors. But I put them on the list as well for meetings. So that's some tips for this. And so Aubrey says it's called Apollo. Startup Health event is called Apollo. That's great, Aubrey. Thank you. I will look into that. So Adam, any other thoughts about getting the most out of JP Morgan? Yeah. Don't count on having AV materials unless you know for certain in advance you have them, because maybe it's your room and you know what it has. And then if you don't, then people will often pull their own personal laptop out and put up a slide deck and sort of space through it. And that's awkward because you're putting the screen to the counterparty, that means you don't see your own screen unless you're looking down like this or unless you've got it sideways to all of you or whatever. And then in the old days, you used to bring books, which is a fancy word for saying a printout 50 slides long or something like that. And I just don't see people doing that as much these days. We've moved away from bringing many copies of your book, which is your long version of your presentation. And people just aren't rushing to the photocopier to print out a bunch more of those these days because they can send a PDF of it easily, that day or whatever. So that is, and then you can also often get meetings there. So it's a very serendipitous place, and you're reading press releases, and then ideas occur to you, and you realize someone else is in Union Square at that moment, and it's Tuesday morning, and you can probably get a meeting with that person later Tuesday or Wednesday, or etc. The conference also typically goes like Sunday night, and then Monday and Monday night, and then Tuesday and Tuesday night, and then Wednesday, and then most people are flying out Wednesday afternoon. There are still some things going on Wednesday afternoon and Wednesday evening, and there's really nothing Thursday, Friday. And that's where this conference, the Health Tech Weekend Summit event, which is new, that's the second half of the week, those empty days. I think the city of San Francisco is renaming this event, not the JP Morgan Healthcare Conference. That's what people raising money think of it as, but they're renaming it like the San Francisco Healthcare Festival. That's a week long, is their term for it. And that means that there are these days at the end of the week. What are they for? Can you persuade people to go for Sunday through Thursday instead of Sunday through Wednesday afternoon? Is that possible? We'll see. So that's interesting. And you could use those days to meet with San Francisco people. So if you could try to fill your meetings Monday, Tuesday, Wednesday with geographically undesirable people, and then stay longer and try to do meetings in their offices with San Francisco people on Wednesday afternoon, Thursday, and Friday, and get a few. And those meetings you could probably do 3 or 4 a day. Whereas if you're all in Union Square together, you can do those meetings 6 to 8 a day. I know people who routinely in investment banking, they would routinely fill their day with 10 meetings. And then by the time it was 7 p.m., they were just exhausted, but they would head out to parties anyway before that. So we're nearing the bottom of the hour. So the hot sectors in January of last year were Gen AI, software around GLP-1 drugs, pharma tech, that's software selling into pharma, and provider administrative sector. That's like the ambient transcribing, for example. And so I'm going to say for this coming year, it's the same. So usually it changes there's a lot of turnover, but I think we've been sort of in a frozen state for a while. And I think those are going to be the hot sectors at JP Morgan this coming year as well. Adam, any thoughts as to other sectors you would add, or anything that's going to be not hot or that I've overlooked that's hot? What sectors do you think will be making predictions about JP Morgan? And what sectors do you think will be hot? Is hybrid virtual care the same as is hybrid virtual care the same as tech-enabled services? Are they very similar, or are they different, do you think? And then you mentioned longevity. Yes, I agree. You mentioned longevity. Go ahead. That's really interesting. I hadn't heard that before. So that's one of the best predictions I've seen. Thank you, Adam. So GLP-1 price collapsed by 9/10 possibly, and that means that the software and programs around GLP-1 that just made ensured it was only used when it was called for and it was well used, and that waste didn't happen and blocked other people from taking them. All that just goes away. There's no reason to have all of that. The price has fallen by 9/10, and that means the software people and the program people around it that's no longer a boom sector anymore. So I think that's one of the best predictions I've seen. And then the not hot sectors. So last year at JP Morgan, the sectors that were most out of favor were, and by the way, to the hot sectors, let me just add, I said provider administrative, but also revenue cycle management, which is part of administrative, but that's another area that's hot right now. So not hot, I would throw in that last year, medtech and prescription digital therapeutics were not hot last year. And I actually think it's going to stay the same. MedTech continues for structural reasons to be not hot. And prescription digital therapeutics are kind of going through a multi-year nuclear winter right now. Could be back in the future. So those are not hot sectors that investors are not interested in general. Do you have any thoughts on the sectors that are not hot this year going into JP Morgan as compared to last year? Great. Well, good. Well, so any final thoughts for our audience? Anything you want to bring to our audience at the end? Great. Thank you. So you've been listening to the Digital Health Investor Talk show with host Steve Wardell. Many thanks to our guest, Adam Kaufman. Thank you, Adam. And we'll be publishing this show as an episode of the Digital Health Investor Talk show on Apple and Spotify. Don't forget to listen and rate us and give us a comment and subscribe. And we love every 5-star review. And our next show coming up is on Wednesday, December 17th with Alana Karen of Solus Biosciences on the topic of what next gen med tech brings to longevity. Thanks. And we'll see you at the next show, and we'll see you at JP Morgan. Thanks. Bye-bye.